Hi, today is the 13th of September and we will review what has been happening in the Nifty. I remember on the last analysis, we had projected a fall from these levels and the fall did happen. However, the fall did not continue and the Nifty then turned around and gapped up. So what does it look like now? So this fall from 11,800 levels does not appear to be impulsive. It is rather corrective. So that is one. The other thing is there is a island reversal pattern which has formed here, which points to a bullish follow through, which did happen. And therefore, at this point in time, Nifty has retraced 50% of this whole fall. And then we are poised at a very interesting juncture. Now, here we have a bullish outcome as well as a bearish outcome possible. Therefore, presently there is no confident forecast as to what is going to happen. We will have to let the market tell us its hand. So, what is the bullish outcome? The bullish wave count suggests that we had a ABC decline for wave 4 and the market has now turned around and is going up in wave 5 to newer highs. In this scenario, the market should go up sustainably in the next 2 or 3 trading days and take out this high at 11,600 odd, and then this outcome will be confirmed. So we will be closely watching, and if this high is taken out, then we will probably go long in the market and buy some call options. So that is the bullish outcome which is possible in this scenario. So what could be a bearish count? A bearish count would imply that this was the first wave down, a second wave retracement, and then another wave down. This is a clear 5 wave structure and a flat correction for wave 2, and 3 of 3 should go down from immediately. So if that is the case, we should see a sustainable fall, a sustained fall in the next couple of days at the minimum. So that would confirm the bearish count, and this count obviously will get confirmed once this low is taken out at 11,200 or so. There is another way to label this bearish count, and let us have a look at that as well. This way we label this fall as a leading diagonal wave 1 and then a wave 2, and this would imply that this should come down in wave 3 again, and therefore the fall should start and this low should be taken out very soon. We do not know whether wave 2 is over here or there may be another subdivision and wave 2 can take up to the 61.8% retracement and fill this gap completely. So that actually seems to be more possible, that this gap is finished and wave 2 finishes somewhere higher up around 11,550, and then the market comes down in wave 3. So all these 2 or 3 scenarios are possible. We are not sure what is going to happen in the next 2 days. Either of those 3 are quite viable, and let us see what happens. What is pretty much sure, however, is that the Bank Nifty is very weak. The advances declines are not too good. Let me show you. So as you can see, as Nifty has been going up, Nifty advances and declines are actually not keeping up with the index. So that shows inherent weakness in this market. And if you were to see some individual charts, you will see very interesting formations. Like this is the chart of HDFC. Now here in HDFC, you can see that this stock has been continuously bouncing off support around 1750 to 1760. And in doing so, it has made almost a head and shoulder pattern, with this forming a left shoulder, this forming a head, and this forming a right shoulder. So if this stock HDFC were to break through this support line, we will see a significant fall. Uh, I think this gap is what is producing all this support. So this bears watching. Is not yet confirmed, but let us see what happens in the market in the next 2 or 3 trading sessions, which should be very, very informative. That's all for today. Thank you and bye bye.